Hi there, traders. This is Brad Gilbert with the FX Market Insight for the 31st of October. Happy Halloween to everyone out there. All right, let's have a look at these markets now. I'll just actually bring you back across. Actually, before I go through the major currency pairs, let's just have a look at the what the main driver is here now. US equities have bounced significantly, or not significantly. They've made up some lost ground, I should say, which takes off a lot of pressure off the off equity markets in general. Now, the US, and this is sort of brought about by US consumer confidence numbers. If I just scroll up there, you'll see they came in somewhat stronger than the forecast. And that's a really good sign that, everyone's pretty comfortable with what's going on. So once again, equity markets sort of kick in. You've got the US dollar index still moving to the top side. The dollar yuan, now there was talk yesterday of a report or some sort of article in Bloomberg suggesting further rate tariffs. It is starting to look very comfortable. It's at around 6.97 at the moment. I think it's just hit a 10-year low, right? So I expect that to sort of keep going, but just be aware, this is a bit of, over here, was a bit of PBOC intervention where it dropped 10 cents pretty quickly in a day. So there's still a good chance this thing could end up down here anytime soon. So it's not such an easy trade, but fundamentally, it looks like it is going to be a lot weaker. So with those equity moves, okay, this is brings on a risk-on appetite. Now, generally speaking, when risk-on, commodity currencies, in particular the Aussie and Kiwi, get some sort of benefit. Now, the Aussie and Kiwi brushed off those strong US consumer confidence numbers and rallied to the top side. Suggests to me the equity markets, and you can see that safe haven trade on dollar yen, they like the strong dollar, pressure off global growth, all that sort of stuff. Dollar yen screams to the top side as well. But still sagging, we've got euro sort of just banging away at 113.40. It's still within recent ranges, but the numbers I spoke about yesterday, Eurozone, GDP, and, that was the main one. There's a whole bunch of other sentiment numbers out of the Eurozone as well, all slightly weaker than expected, okay? And that's seen the euro sort of drift lower. Don't forget, we've got the Italian thing, budget issue lingering. We've got Merkel just pulling out of, she doesn't want to be re-elected to the CDU. So, euro is just struggling. And it looks to me like it is going to keep going lower. Now, sterling, I've still got a cheeky bit of a stop loss entry above the resistance line here. Looking for that cheeky good news on a deal. Every time I sort of do this, there seems to be more negative news. Okay, now, Brexit, once again, playing into the downside on sterling. And with euro and sterling coming off, of course, that's one of the major catalysts for the US dollar index to be higher. As I keep mentioning, that's about 70% of the dollar index basket. So if they come off, the dollar rallies, right? Dollar CAD, well, Central Bank Governor, or Bank of Canada Governor Stephen Poloz, maintained his hawkish tone there yesterday. Now, there hasn't been a big move. Usually would see something bigger. Oil is a little bit weaker. It seems to be caught in between the US dollar, what the US dollar is doing, Canadian fundamentals, and then also the Bank of Canada. So, and oil there as well. So it's a little bit confusing there on dollar CAD at this point. All right, but now just coming back over here, I just want to give you a little bit of a look at the general news that the market is looking at. It's always good to focus on what the market's looking at, not just whatever you're looking at. Okay, so having a look here, dollar at 16-month high, strong US data supports. Well, yeah, that's true. The consumer confidence numbers, we get stronger equity markets, which gives the dollar a bit of a bounce, but also this Brexit is a major part, and the weakness in euro is another good reason why the dollar is higher. Here we got the China's 10-year low as trade war bites. Now, we've got some manufacturing numbers coming out this week in China. It's going to be very important to see if they do start to weaken. The Chinese government, central bank, I don't know what they're doing with the numbers, but we'll soon find out. And that's where the main action is at this point. And the good thing is we're actually getting back into more of a fundamental situation. I know Brexit is not, but fundamentally, this is where the strong US fundamentals come into play, and what should be weaker Chinese fundamentals going forward. So if I just come up to the MyFX Trading Hub, okay, just for the moment, we still have geopolitics dominating. That seems to be the lingering factor. But what we do have is as well, we have strong US fundamentals, which is really kicking in. Now, looking at today's trading, you've got to really focus on the opportunities that are coming out. Now, the RBNZ, this ANZ business confidence numbers, usually it's tier 3 data or even worse. But what we are seeing, the RBNZ has been signalling business confidence as being the key driver for their interest rate decisions. Now, they've taken off the table an interest rate hike at their last meeting. So they said everything's pretty cruisy, possibly could raise rates. That's going to be a very important one for the Kiwi. Just remember, liquidity is quite low. The Aussie CPI numbers, very important for the Aussie, of course. The main number the central bank looks at, this is a quarterly number too. It comes out every 3 months, unlike a lot of the other countries, which is monthly. So this has bigger bang than the usual CPI out there. Okay, so just keep a very close eye on that. Any sort of shift in weakness and strength here, and the Aussie will react. Now, at the moment, the momentum on the Aussie dollar is up, so stronger numbers seem to me to be the best way to go. And then you come back down. Then we come back down through the main numbers. Now we're starting to get some manufacturing numbers out of China. We get some Eurozone CPI flash numbers. Once again, if this number is weak, this is going to be another good trading opportunity as well. And then you've got Canadian GDP numbers, and we even run into the Swiss National Bank Chairman Jordan speaking. So that's it. This is a really busy day, right, across all time zones. Of course, what you can't see in there is Brexit. Okay, that's just ongoing, right? So that's just one thing to keep on going. So regardless of what time zone you're in, if you're in the Asian session, you're going to have a pocket of data to potentially leverage off. In the European session, the good thing here is we have sort of downside momentum or short-term trend in the euro. So we have a clear direction. Those CPI numbers, if they come in weak, well, it should be an easy trade there on the euro. Now, just having a look at the Canadian GDP numbers, I mean, the CAD to me, it's been pulled and pushed all over the place. The fundamentals to me haven't got a clear run because there's too many variables impacting. Have a look at this number. If there's significant variance, we may see some movement, but to me at the moment, it's still too muddled, dollar CAD, to work out what's going on. And then later in the session, Swiss National Bank Chairman. Now, the Swiss guys, they rarely speak. So if he's talking anything about the economy or something like that, he may have some things to say with regards, interest rates or whatever it might be. Just keep an eye on that. That's one of those left field events that could come up and sort of come into play at any time. All right, just to finish off, just looking at the overall snapshot here of the analysis, no change, right? Bearish sentiment as far as I'm concerned on the euro, bullish for the dollar index, and bullish for dollar Swiss. Now, I am very sort of negative on sterling, but the downside technical move in sterling is all Brexit. Outside of that, to me, it goes up. But that's why I've got it sideways. Aussie and Kiwi, well, we've got key data today, which may change that sentiment. That's why we want to keep an eye on those numbers. Dollar yen, yep, hourlies is going up, but the weeklies and dailies is still sideways, and same for dollar CAD. So focus today, the best trading opportunities to me are always the ones that have clear sentiment, okay? Now, if you've got data coming out in these pairs, that's great. We do have CPI flash estimate for the Eurozone. That's a good one. Now, we also have Aussie and Kiwi data. Now, these currency pairs don't have clear sentiment as far as I'm concerned. So we may have a trading opportunity, but it's probably not a long-term one because we don't have clear sentiment. If you have, let me just come back to the euro. If you have clear bearish sentiment, then you get weak numbers on top. That's a cracking trading opportunity. At the moment, the Aussie and Kiwi are sideways. So the data could be a trading opportunity, but don't fall in love with it. We've got other things to consider. And that dollar index is just going to keep charging high from here. All right, guys, that's it from me. Pretty big day coming up. As I said, lots of data coming out. So keep an eye on those, especially on the Eurozone. Like out of all these opportunities, to me, the Eurozone is the best because it's got clear direction and we've got data coming out. Where these other ones, yeah, sure, it's a little bit muddled because we don't have clear direction on those currencies. All right, guys, have a good trade day. I'll see you in the live trade zone. Cheerio.